Hi friends, today I will explain what is deviation and what are the deviation points while loan sanction. So normally you want to construct a house, you will take a approved plan from the local authority. It may be municipality, it may be corporation, or it may be local body. So when you are constructing a house, as per plan means there is no deviation, but you are crossing the plan or whatever the pinpoints they are given in the plan. If you are cross, then you are deviating. Same way, while loan sanction, lot of process will be there, like policy parameters will be there, product parameters will be there. Policy parameters are like minimum age of the borrower, maximum age of the borrower, or CIBIL rate, CIBIL rating, and product level parameters are your minimum rate of interest, maximum rate of interest, minimum loan amount, maximum loan amount. If you are crossing the policies or rules defined by the bank or organization, due to this, if you are getting any financial loss, so to eliminate this one, deviation approval process is implemented. So for the 1% deviation, then it should be approved by X person. If it is a Y% deviation, then approved by some other person. Some deviations can be rejected, some deviation can be approved, some deviation can be sent for the review also. So some deviations will not approve. For example, customer risk rating. Customer in a high risk category, and he approach for the loan, then management can take a decision to reject the application. So if you want approval, then you have to go for the deviation, because it is not as per the bank's policy or organization, then it should be approved by the another person in the organization. So what is the deviation management? Deviation management is identifying the deviation, assessing the deviation, correcting the deviation from approval instructions, established standards. Yes. So you identify the deviation, you assess whether what is the impact, then you send it for the deviation for the correcting the action. It may be branch level deviation authentication, or regional level or corporate level, that will be decided by the organization. So in deviations, two types of deviations are there. One is planned deviation. For example, one customer comes for a loan. So he belongs to a good organization, and he is having a sufficient take home salary. So he can bargain with the bank or financial institution for the reduction of the interest rate and processing fees. So before sanction itself, so bank has decided personal, I want to give it for 9.25. But before sanction itself, borrower will have a discussion with the bank and he'll get a pre-approved rate. Then you are deviating the bank policy. Instead of 9.25, you are giving a loan for 8.5%. You are deviating, but the deviation is pre-approved. So this is called a pre-approved deviation. Second one is unplanned deviation. So before sanction, you have not identified the deviation, but during the verification of the document, you find the deviation. For example, so your take home salary is good, your organization is good, everything is good, then loan sanction has completed. When go for the verification of the property, physical verification of the property, this is only example having. So there is a deviation layout plan. So as per the layout plan, you have a 5% deviation, you can do a 5% deviation. But when you go for the technical verification, this is 10% deviation. In this case, this is unplanned deviation. So these will be, some deviations can be already discussed, it can be rejected, some can be overridden with a deviation approvals. So category of deviations. So category of deviations will be incident, minor, major and critical. Incident will be don't do not directly impact your quality of the product. Minor will be negligible impact overall your quality product. For the incident, there won't be any product on your quality of the product. See, as per the policy you are giving, and only your it is a incident. A major means you have moderate to substantial impact on your product, and critical will be you have a impact on your product quality, like giving loans to people involved in illegal activities or high risk customers. I'm giving example, and you'll have a lot of critical deviations. So approvals. So depend on all these deviations will be categorized some categories, some product level deviations, policy level deviations, different documentation deviations. So different deviations, we have different approvals. All the staff in the bank will be assigned with the levels, level 1, level 2, level 3, level 4, depend on the organization requirement. All the deviations will be categorized. X deviation should be approved by L1, Y deviation should be approved by L2. So these are the approval levels in deviation. So policy deviation means anything your does not fit in the bank desired set of norms. For example, borrower age and CIBIL rating I mentioned in organization policy. So my policy is borrower's minimum age is 30 and maximum is 70. If I'm giving any loans to 7, the year borrower age is 72 or the borrower age is less than 30, then it is a policy deviation. Even CIBIL rating. So my policy says 650 is the minimum score for the sanctioning a loan. If I'm giving a loan for a customer, credit rating is 625, then it is a policy deviation. So what is the manual deviation? So while processing the loan, while sanctioning the loan, all the parameters are satisfied, but still staff has a suspicious on the documents. For example, customer has submitted KYC documents and bank staff has a suspicious, then he can go for the manual deviation. Even though all the parameters are satisfied, still you want to get a approved from the deviation approval staff, then you can send it for the manual deviation. So what some examples of the deviations? We have a lot of deviations. Okay, uh, customer having a prepaid phone, not postpaid paying, or credit rating, credit history is not good. Then loan amount is less than minimum and more than maximum loan amount. ITR has filled a gap of 6 months for the last 3 years to apply for this loan. So, and property from the negative area, then the layout plan is not available, and he has constructed 20% deviation of the layout plan. All this will come under the deviation approvals. These are not as per the organization rules, policies, product parameters. Then these will be identified as a deviation. Then these deviations will be sent to the higher ups for the sanction, approval, rejection, or review. Thank you, friends. If you like my video, please comment and like my channel, like my video, and share with your friends also.